In today's video, I'm going to quickly show you how to analyze the market using the Fibonacci Retracement tool. Now, by the way, this Fibonacci Retracement tool is a simple but yet powerful tool, right? Now, the first thing you need to understand before drawing the tool on your chart, you need to understand the trend, you need to understand waves. You have to look at how the market is moving, and then it will help you to draw the Fibonacci retracement tool, simply because you are going to be using the most significant swing high and the most significant swing low based on the Fibonacci retracement placement. Now, I'm going to give you an example. This is a major wave down, and you could call this a retracement, and you could also call this a major wave up, and you could call this a retracement of the major wave up. So you have waves in this manner, then you have a retracement. That's why it's called the Fibonacci retracement tool. Now, this Fibonacci retracement tool has some key values, levels I'm going to show you in a bit, that we use to set our entry and even our exit and take profit for exit. So entry and then exit for stop loss and take profit. Now, quickly, we're going to do something. This is more or less a recent wave up, and we can call this here a pullback, a retracement of this wave. So for you to do this, you could draw the Fibonacci from these lows to these highs, because this is an up move from here all the way to this point here. Now, as you have done it in this manner, and then you look at your chart, you'll notice some key levels: 38.2, 50, 61.8. We also have the 23.6, but we removed it as we have noticed that it's not as strong as the 38.2, 50, and 61.8. Mind you, I prefer 50 and 61.8, especially the 61.8, simply because you can make a whole lot of pips at the end of the day. So look at what is happening here. I'm going to mark some levels here, because you can also combine this with what we call support and resistance. I'm going to mark this area here, and I'm going to show you some support resistance that you can use as form of confluence. Here you had a resistance, support, support, support. Now, this is the Euro USD daily time frame, by the way, so you could use this and take advantage of the market. Price is now in that area. So that means that generally you're expecting price action for you to enter here, stop loss here at below that 61.8, below that structure for the support in this case. And of course, your take profit should be here. You can see if you get an entry here all the way to this point of take profit, and this is your stop loss, you can see that the reward is high, and this is a good reward at the end of the day. And that is simply what trading is all about. It is meant to be low risk, high reward trading. Exactly. So with that said, I want to also show you something, because some other traders would have been looking at it from another perspective. Why did I say that? Now, we use these lows over here, the swing lows, extreme swing lows, and extreme swing highs here to draw it. But when the price got to this point here, and then it was pushing higher, it got to this point here and then started to drop. Why didn't it get to this point here? Now, as it's coming back to this point here, if you look closely, let me just clean this up a bit. If you look closely, you can easily see another wave to the downside. This is another wave to the downside, where another set of traders could have easily put Fibonacci from these highs to the lows over here. And then before you know it, you would have had another area here at the 61.8. Remember, I said 61.8 is an area that I like. You can see a bunch of resistance, 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 boom, resistance here. And it went back all the way down to the zero of the Fibonacci from this swing high to this swing low, right? Now you can see that this area confluences with the 61.8 of this up move. This up move here is where buyers are looking forward to entry here. And then this one, 61.8 here, sellers were looking forward to selling here, right? But then as the price is here, this is what I'm expecting. Two things. Price could either bounce from here, from the lows, and then push higher, or if it breaks this 61.8 of this uptrend, trust me, it simply means that it's going to go all the way to the downside. So this is one way that traders could use the Fibonacci retracement tool to even gauge if the levels are going to hold and where it might probably be going to. Don't forget, when you get your entry, your exit should be at the other side, and your take profit should also equally be at the other side as well. Just like here, you got your entry here to buy, your stop loss would have been below that 61.8, which has confluence with this flip zone, support, and resistance. Take profit would have been here. Quite all right. It didn't get there, but then it got to this point here, which was still good reward. You could have easily closed partially, or you could have moved your stop loss to break even, or whatever the case might be. And where it is now might be another opportunity to take it all the way up here. Who knows? Or it might break. And if this breaks over here, expect this area to act as a form of what? As a form of resistance to go further down. So this is just a quick one looking at the Fibonacci retracement tool, how to trade with the Fibonacci retracement tool. And this is one of my best tools out there to make use of. And I encourage you guys to also look into this. If you have any questions, feel free to ask. If you are new to the channel, hit the subscribe button and turn on the notification bell, right? Thank you guys. It has indeed been a good one. Enjoy the rest of the day and watch this play out, and we'll see how we can take advantage of it further. Thank you and goodbye for now.